Cool. Hey everyone, how's it going? I can't hear you. No, we're not going to do that. I'm Ben. I'm the co-founder and chairman of Nuri, previously Bitwala, and today I'm going to tell you why FinTech and DeFi need each other. I have a confession to make. First and foremost, I'm a banker. Boo. So my company does AML, it does KYC. We are a centralized legal entity. We are based on a license that is granted by the German government and the ECB. We're permissioned, all of that horrible stuff that we're trying to get rid of in DeFi. But I feel like I have many of the same values as you. And that is based on my belief that finance needs to dramatically change. But the way I think we will achieve that change is perhaps different to some people here at the conference. I believe the best way of affecting change is a combination, combining DeFi and FinTech and making these two work together. So before I go into why, my product is a bank account. We created the world's first bank account where you can store and trade crypto. We actually launched this in 2018. Back at the time, it was seen to be almost impossible that you could launch something as unregulated as crypto with something as regulated as a German bank account, but we did it. Our goal was to make it as easy as possible for people to go from the world of fiat, the world of euros, into the world of crypto, Bitcoin and Ethereum, and I think we did a pretty good job. We think that there's more than just trading cryptocurrency in the world of blockchain, and that's what we're really excited about. So first of all, FinTech. Who would like to venture a definition of FinTech? Slightly, yeah. I think that's relatively accurate. I see FinTech as being the best that we could do until now. So we had traditional finance, which is your brick and mortar banks, your traditional brokerage houses, security deposits, etc. And FinTech is a technological effort, the layer on top that has tried to make these better. But I would argue that actually, if we look at the progress in the last 20 years, it really hasn't been that much. In fact, probably the most dramatic change that we've seen is now we have something like PayPal. So if we break down the progress of FinTech, well, okay, nowadays I can open a bank account with my mobile phone and I can have a sexy debit card to pay for my goods and services. But if you look at neobanks like N26, like Monzo, like Chime in the US, really it's the same old banking based on legacy technology from 30 years ago in the background, the financial infrastructure, and all you have is a sexy layer on top. So it's kind of akin to painting lipstick on a pig. Yes, it's better, but there's only so much that you can change without touching the fundamentals, the infrastructure. Then you have the Layer 2 solution. No, I am not talking about Ethereum Layer 2. I am talking about the traditional world of Layer 2. So TransferWise, it's a great service. It makes international money transfer way less painful than before. But why do we need a private company to do something as basic as transferring value abroad, right? The only reason that we have TransferWise is because the SWIFT system underneath it doesn't work properly. And then finally, we have this unbundling and rebundling. It used to be the case that you had to go to your bank account to get a mortgage, and now you can have just a startup that does only that, and then you have these super apps like Revolut that basically combine lots of things together into one interface. So this is the degree of the advancements of the innovation that we've seen in FinTech until today. And is it through lack of trying that we've only made it this far? No, it's because FinTech is built on this legacy infrastructure, right? You have these banking systems, and the technology is extremely old, and it's extremely hard to update. So banking technology was based on a time when the storage of data and computational transactions were very expensive. So did you have real-time transactions? No, you had batch transactions. Which is why when you make a bank transfer, you tell your bank, they tell the bank of your country, and then that country bank tells the ECB. And it's basically a very slow system that needs to sync batches of transactions in CSV files back and forth. And that's the fundamental reason why transactions aren't instant. It's the same with securities. You know the whole GameStop thing with Robinhood? Well, the reason that they stopped trading wasn't actually because they wanted to punish their customers. It's because it takes 3 days for securities to settle in the US. 3 days. That's just crazy when you compare it to the wonderful world of blockchain. And with Bitcoin, we had the invention of blockchain. And what this was the invention of digital scarcity, first of all. And secondly, it allowed us to transact value trustlessly between parties without using a middleman. Now, this was very exciting because for the first time ever, we could transfer any amount of value anywhere in the world. All you needed was an internet connection, and we could avoid all the middlemen, all the banks. And imagine me back in 2013, quite a lot more facial hair. We were really excited, and we started off very early on as the Bitcoin consultants, die Bitcoin-Berater in Deutsch. And we went to some of the biggest companies, and we were like, hey, look, now we've solved your problems. You can do instant settlement all over the world. And yeah, we were a little bit naive. The big companies, they laughed us out of their offices. If you look at the dissemination of new technologies, it always starts off with the hackers and the criminals, and then the startups and the slightly larger companies, then the enterprises, and then finally the governments. So it was way too early along the distribution curve to actually get these companies to adopt it, but we tried. We actually got the piece of advice from Roger Ver, the founder of Bitcoin Cash, and he was like, you guys are way too early to be a consultancy, you should start building stuff yourself. And so that's when we really started our journey. Has anyone been to Room 77 in Berlin? So Room 77 is a very famous Bitcoin bar, unfortunately shut down now. It was the first place in the world, the first physical place that accepted Bitcoin. And you could use it to buy beer and burgers. And we used to go there every week, and people would make a cheers, they would raise their glasses, and it would be to the end of the banking system, right? We don't need Visa anymore, we don't need PayPal, we don't need central banks, private banks, because we have this better technological solution. Me and my co-founders were a little bit different, because we saw this as being a way of upgrading the existing world, rather than replacing it. And so we started working. And now I want to say why this actually should read why fintech needs DeFi. This is a typo. So why does fintech need DeFi? Well, we have a lot of unsolved problems. Remittance is still a mess. It's still very difficult to send a small amount of money to different parts of the world. You're also paying high credit card fees. So in the US, it's around 2% on every single purchase, which is passed back to you by the merchant. We have a complete mess in terms of savings and investments, so you're earning 0% interest on your bank balance. And then finally, accessibility of services. So about a third of the world's population is unbanked, and this means that we cannot transact with them. So we cannot provide them liquidity or take liquidity from them or trade with them so easily. Now, it's quite difficult for us to think about the tangibility of that because, hey, we're here in the developed world, we all have bank accounts. But I want to give you another example. Hedge funds. So I think a lot of people woke up just to what hedge funds can do with their assets because of the GameStop fiasco, and it becomes clear that hedge funds can lend out their stock and earn interest on it and borrow accordingly. Now, those possibilities aren't available to people like us, right? A very sensible investment strategy, if you're out of crypto, is just to buy ETFs and to hold them for a long time. So if you're going to hold them for a long time, why can't you lend them out and earn interest on them just as you would your DAI or your Ethereum? Well, the reason is that's not possible because it's not accessible to you, and the reason for that is that it just isn't cost effective to deal with such small amounts. And tokenization, blockchain begins to solve that. But actually, this question is posed wrongly. It's not why does fintech need DeFi, but it's rather why we need DeFi. It's because the people inside of fintech, and I know a lot of them, it's not that they don't want to solve these problems, it's just that they can't, because they're building on this legacy infrastructure. And so while we've been able to disrupt the distribution of financial services, because of the infrastructure that we haven't been able to disrupt the fundamentals. So I would argue broadly that fintech needs DeFi to survive. And the reason for this is very simple. If you look at the properties of DeFi, you have a whole new system built from a blockchain technology which is only 11 years old, and it's open source, it's composable, it's interoperable. So when I, in my bank, want to create a new product, I have to talk to regulators, I have to set up SPVs, I have crazy legal costs and financial advisor costs just to think about creating, say, a new ETF product. in the world of DeFi, you can go to Ethereum, you can go to GitHub, you can fork your project, you can tweak it a little bit, then you can launch it that same day. And what's more, you can have it interfacing with the other projects inside of Ethereum as well. So these are the three properties that I believe is a recipe for far faster and sustained innovation in the world of DeFi than in the world of CeFi. And hey, I don't think you need much convincing here. Like, if you've been in this space for more than 6 months, you will see just how crazy fast things are moving, right? We've had so much more progress in the world of DeFi than we have in CeFi in 20 years. So if CeFi doesn't adopt the best parts of DeFi, then it will fall behind and it will die. And just as FinTech was able to disrupt traditional finance, DeFi is going to disrupt FinTech. So if DeFi is so amazing, then why do we need FinTech? Well, I think that adoption equals value minus friction. And I think the value of DeFi is relatively clear, but there's still a high degree of friction to get into it, right? So if you think about the prospect of, say, earning a high yield on your stable coins, everyone would like that. But if you tell them, OK, you have to go to an exchange, you have to deposit money, you have to buy stable coins, then move it to MetaMask, then choose this protocol, et cetera, you've already lost them. And so what we need to do as a community is to reduce the friction. And we believe that our approach does that. So our hypothesis is customers need 3 things to be able to reduce the friction of DeFi significantly enough to get involved. Broadly speaking, they want the comforts of centralized finance, but with the benefits of DeFi. So what does this mean? Well, on and off ramp built in. So customers think in euro, not Ethereum, not DAI. They want to go for their credit card from the bank account into these protocols and then exit the same way. Secondly, it's customer support. So trust me, customers get very unhappy when you don't answer the question, where is my money? You need to have someone that you can pick up the phone to, send an email, and guide them through a process. Because when people are dealing with value, they need a lot of hand-holding. And then finally, trusted counterparty. Customers want to deposit their money with trusted brands that can be held accountable. I think that is unlikely to change. And it's kind of happening in DeFi as well, right? You trust projects where there's trust behind it. Like, if Andre Conde launches a new project, then you trust him based on his track record. So we're already seeing a parallel, even though DeFi is about trustless interfaces. So yeah, this is the kind of the broader explanation of what we think will happen. So until today, we've had central banks, and then you have, building on top of those, you have the private banks. On top of those, you have the fintechs. In the future, we will have blockchains as being the fundamental base layer. Then on top, we will have the decentralized applications, the Aves and the compounds. And then on top, we will have a centralized layer, which is providing these brokerage and these value-add services, like the ones I said on the previous slide. So what are we doing? Well, we think that DeFi will solve most, if not all, of the problems of traditional finance. But we are focusing on a very specific angle, which is to become the bank account to grow your wealth. We think that of all the problems in the West right now, in the developed world, access to wealth growth is one of the biggest. Again, you're earning 0% interest on your bank balance. That's pretty insane if you think about it. If you told our parents 10, 15 years ago that the interest rate would be 0, they would freak out. Equally, you have people going to meme stocks like GameStop. So I see this as being an expression of traditional finance failing to provide viable wealth growth opportunities to the next generation. And so at Nuri, this is our goal. We want to take the best parts of decentralized finance. We want to create a brokerage layer around them and allow our customers to access them from their Euro bank account. So actually, we rebranded. We were previously Bitwala, which was more techie, more nerdy, more for crypto. I love that brand, but we chose a more mainstream brand because we really believe that DeFi blockchain is for the masses and not just for the nerds. So some of the products we're building, first and foremost, a Euro savings account. So imagine being able to pull your euros from your bank account and move them directly into a savings account, and then you would get the yields of decentralized finance, but all of the comforts of centralized finance. And for you guys, you probably care about what's happening under the hood. But for a lot of people on the street, they don't actually care that much, right? People don't care so much how fractional banking works or how credit cards work. And so while today the focus of DeFi is very much DeFi as a product, DeFi as a what, I believe in the future it'll move more towards the how. Because unlike the internet revolution that necessitated a change in the interfaces we use, DeFi and blockchain can just change the infrastructure we use. And I think in the future, everyone's going to be using blockchain, but people won't think so much about using it because it's going to be abstracted away. And so for our customers, yes, they're going to have to sign terms and conditions saying this is being powered by DeFi and USDC in Yearn or whatever. They will have it feel like just moving money from one account to the other. I think another killer app is the ability to take liquidity against your assets. So I just mentioned a very common investment strategy is to invest in ETFs, MSCI World, MSCI Emerging Markets. You buy a little bit each month, and then you hold on to that, and then it compounds. Great. Of course, it's better to buy Bitcoin and Ethereum, but for the average person. And if you're going to be making long-term investments, then you should be able to get cheap credit against those investments. If you need to put down a deposit for a house or you're moving flat, you need to put down a security deposit, you should be able to get access to cheap credit against your ETF portfolio, against your crypto portfolio. And we can make it cheaper because it's collateralized, right? It's way better than getting a loan from the street. So broadly speaking, we think we can do better savings, better investments, and better loans than the fintech of today because we're working with a different infrastructure. We're working with blockchain infrastructure opposed to the world of centralized finance. And yeah, I know this is kind of like a conciliatory, like everyone be happy message, but this is my true belief. To actually have the biggest impact, we need to combine both sides of this, using DeFi and blockchain as the infrastructure layer, and then having a distribution layer which is partially centralized. And yeah, that's it. I'll take any questions now.
Thank you. So two questions. One is, how are you offering 4% on euros? I mean, I would understand if it's dollars that you can put in USDC, but euros are not really in demand on the blockchain. And the other question is the regulator completely fine with what you're doing? And if yes, why are not more companies doing the same thing, offering crypto as part of a bank account? Thank you.
Yeah, so with regards to euro opposed to USD, unfortunately it's the case that there isn't much of an ecosystem for euro at the moment. There's just some synthetic euros, and there's the other euro-S coin, which is still very, very small by market cap. One of the ways that we're looking at solving this is by doing off-chain hedging. So just doing forex hedging to protect our customers' risk. So because our bank accounts are denominated in euro, we want to be able to provide a euro-based savings account. That's one option. The alternative would be just to provide them purely USD-denominated balances, but that is already an additional barrier for our customers, and ideally we'd like to avoid it because, yeah, you want to be thinking of it as a savings account and not as a forex hedge. With regards to the second question, what do the regulators think about this? We chose a very prudent regulatory environment, so we established ourselves in Germany, and Germany is actually pretty progressive with regards to blockchain. So the Merkel administration published a blockchain strategy. So I think if you're a company, you need to think very carefully about where you want to register. We see that now with Binance and stuff, being a little bit attacked by those choices that they've made. Everything that we do is working within a regulated environment. So we're currently working with a partner bank, and we are working with an umbrella license. And when we create financial products, then we would, for example, file a prospectus for a security with the regulators, and then provide it to our customers in a regulated way. So it's really difficult. You need to be strong on the technical side and on the regulatory side as well, and have a good working relationship with regulators. And so that's why not so many companies are doing it. That's, by the way, why I love DeFi so much, because you don't need to worry about that stuff. You can just clone a repo and start building, whereas in DeFi, unfortunately, you still need to have a significant amount of startup capital just to get those costs down to build the products that you want to. And no more questions. Cool. Thank you so much.